Okay, so my assignment for the homework is to present how to do problems 11 through 13 on the chapter 2 quiz. So if we can kind of look at that, this is kind of what I have set up for the income statement, the statement of returned earnings, and then I didn't label it, but that would be the balance sheet for, or the balance statement, I guess is a better word for it, for the third assignment. So I kind of just have an idea right here of how to base it off of, but this is what it should look like. So I'm just going to go back to where I was, kind of walk through it. So the income statement is helping us to figure out what our revenues that we got in for that month. Notice how it says for the month ended December 31st. So just talking, it's kind of the month and a period of time instead of in the balance sheet we see just as of December 31st. So it's a specific date. So we'll just get started, but the first thing you want to do is you want to look at the revenues that you had for the month. So as we can see, all these right here besides account payable and common stock would be assets, and everything else would be part of equity or liabilities. But the only thing that we have right here is consulting revenue. So what we do is we want to put that consulting revenue in this spot because obviously it is a revenue that the company made. And then for that, you would just put in the price or how much it was, so $27,100. So that would be kind of it for that. And going on to the total revenue, you'd kind of look at it, and obviously it's just $27,100. Oops. Let me fix that. I guess we can just put 27,100. Kind of looks off, but it should work. So the next thing you'll do for expenses is you'll go on that same list and look for all those expenses that you had for that year, for that month. So there's a rent expense, there is a salaries expense, a telephone expense, and a miscellaneous expense. So after that, you kind of just line up with what it was. So rent was $9,660. Salaries was $5,690. The telephone expense was $980. And then the miscellaneous expense was $600. So after that, you kind of just want to double check and make sure that there isn't any missed parts of equity or how much revenue you got in, so any missed revenues or expenses. At this point, there is none. So for the total expenses, it would be $16,930. So what you do to get that is you actually subtract the total revenue cost, which is right here, should be over here, but it'd be $27,100 minus $16,930. And what that's going to give you is your net income of $10,170. So once again, you're going to be subtracting the total amount of revenue from the total expenses, so $27,100 minus $16,930, which would be your expenses, and you'd get a net income of $10,170. So after you're able to get that net income, you're then going to move on to problem number 12, which is developing a statement of retained earnings for this as well. It talks about in the question or assignment that the retained earnings as of December 1st was 0. So at first there was no bank account balance. That's why I just put 0. And then what it has is what you need to do is you need to add that net income, which is what you calculated in the income statement. So it'd be $10,170. Okay, and that's all you're going to put for right there. Then what you're going to do is you're actually going to go down to where it's the less for dividends, and dividends is going to be coming out. So the tricky part that I was a little stuck on, and I couldn't understand why I was getting wrong, was I was putting in 6,100, and I knew that was correct. But the thing is you need, because dividends are a negative thing, you need to actually make a put it in parentheses or a minus, which if you were to do it, it would show up in a minus. But what that then does is that actually subtracts it for you. So the way we figure out the retained earnings is you add the retained earnings of December 1st plus the net income of what the income statement was for that month. And you subtract it by the dividends that were paid out that specific month. And then for the retained earnings, what you'll get is 4,070. So once again, as of right now, we only have 10,170 minus 6,100 is 4,070. So as you can see right here, let me go to that same problem. As you can see right here, if you were to put just 6,100 in here, it still gives you the 4,070, but the trick is you need to make sure that you put a parentheses in it, because that is going to be what differentiates it from being a positive number. And in the income statement or in the statement of retained earnings, we need to make sure that there's a parentheses for the 6,100. So just check your work again. That's what I like to do, and you can see that it is correct and in the correct format right there. So the next thing that we need to do is go to the balance statement, or the balance sheet. And what we're supposed to do here is we're supposed to then label all of the assets, liabilities, and the equity, and then make sure that the balance sheet adds up all together. So what we do here is we then go on to making sure that the assets and the liabilities and equities, they're all added up together at the bottom. Just want to make sure I'm still recording. Okay, perfect. So what we then do is we then start with, I like to start with assets. So I go down the line of all the assets that are included. So in this case, it's cash. It would be accounts receivable. It would be office supplies, office equipment, land. So as we can see, that's kind of the only things that are included for the assets. And what we'll do is similar to what we did before, is we'll actually put those numbers in, make sure that they're correct. Accounts receivable is 22,470. The office supplies are 53,60. Office equipment is $20,120. And then the land is $44,100. Okay, so for that, that's actually what it'll do is it'll calculate for it, and that'll give you a total of $117,490 in assets. So then we move on to liabilities. The only liability that we have here is an account payable. And so what we do for that is we then go to liabilities and we put the account payable and the price that's associated with it. So $10,420 is what it's going to be. And then we can see here there's no other there are no other liabilities part of this. So the next thing that we want to do is, as you can see, and you can kind of go back and check for the other parts, is, as you can see kind of in the newer part, there is no, even though revenues and expenses are part of the equity, because we calculated previously in the for the net income when it came to the income statement, we actually don't need to include that for the balance sheet. So what we do is we actually are just including the things that are remaining. So as you can see, dividends are not included because that was calculated in the statement of retained earnings, and then also the expenses was calculated in the income statement to provide the net income. So the only thing that we need to include is the common stock and the retained earnings. So we will go to that. We're going to make sure that we put common stock. So common stock for equity, that is going to be 103,000. And then the other one is going to be retained earnings. So where we get that is from the final balance of this number right here, 4,070. And so we make sure we make sure, hold on one second. Yeah, we make sure we put that in there correctly, so it's 4,070. And then this will actually equal 107,070. So we want to make sure that we can calculate, because we can see right here the total liabilities is going to be 10,420, and the total equity is $107,070. So what we then do is we actually add the liabilities and equity, and what we come out to is 117,490. So the trick is making sure that both sides of the accounting equation is equal. So we want to make sure that there's the same amount of assets as there is for equity and liability combined together. And so making sure that these are all lining up equally. If you somehow get a different number than what the total assets is on your total equity and liability, then there was something wrong. Maybe you missed possibly one of the assets, or you maybe missed one of the equity things like common stock, or maybe you added one of these things. But for the balance sheet, you really are just including the liabilities, the assets, and then the equity, and then your retained earnings that you calculated here, as well as included with the income statement. So these are kind of how you go about filling these graphs and sheets out. So if you have any questions, please let me know. Thanks.